In this video, we're going to explain what are dividend stocks. Dividend stocks are publicly traded businesses that pay part of their profit to their shareholders. Think of a dividend as a reward for purchasing a share of a company. An example of a well-known dividend stock is Pepsi, Visa, Lowe's, BlackRock, D.R. Horton, Procter & Gamble, Apple, Microsoft, and of course a bunch more. Companies like Apple and Microsoft have large economic moats. Just like a medieval castle, these companies have a moat that serves to protect those inside from the fortress and fend off competitors trying to take their riches from the outside. Why do these companies pay a dividend? Well, they're at a point where they're competing with themselves. It's best to reward their shareholders by paying a piece of their profits. The Google search shows the dividend yield for the company. In our example, we're taking Apple. Apple, if they were to call their dividend today, they would have a share price of $134.16, and you times that by less than 1% since their dividend yield is displayed here. You'd get 81 cents annually, but they pay their dividend quarterly, meaning you'll be getting 20 cents per share quarterly on average. An important metric to understand is payout ratio. Apple had a payout ratio of roughly 22%. By looking at the cash flow statement, you can see net income, and you can see dividend payout ratio. So you just take dividend payout divided by net income, and you get that 21.77% you see. If a company was paying 100% of their net income or more, this could be a problem for investors because they'd either have to borrow money or cut their dividend. And when companies cut their dividends, shareholders react by selling the stock, which sends the stock downward. The good news about Apple's management is they focus on how dividends are being paid, as I explained with the payout ratio. If management wanted to keep a certain yield, they may be getting caught up to dramatically increase dividends. As shown in this image, you see that Apple's dividend yield decreases, however, their payout increases. With the stock more than doubling from fiscal 2019 to fiscal 2020, the company would have to double its dividend to keep the same yield, and that would essentially pay out more of their profit. Even though Apple's dividend yield has been decreasing, their dividend payout has increased, as demonstrated in this graph. The crazy thing about Apple is they have even more room to increase their dividend as well as invest in new ventures. Probably wondering, where do you get started now that you know a little bit more about dividend stocks? Well, you can open up a brokerage account with Webull and get 2 free stocks valued up to $1,850 just by depositing $100. Just remember, when looking for dividend stocks, look at the yield, payout ratio, and a history of increasing dividends. You don't want a payout ratio over 100%. You don't want management to keep increasing yields, only the payout. Make sure you like and subscribe, and thank you for watching.